I just want to start out by welcoming everyone and thanking you all for joining the latest installment of Powering Business with Blockchain. Obviously, thank you to our guests, Roger Bayston and Chris Perkins, for joining as well. For those who may be new to the series, during these sessions, we really like to host leaders and executives from across really different industries, institutions, enterprises to really discuss how they're thinking about blockchain technology and how they're thinking about it in the context of their businesses and their industries, and how their efforts have really evolved and grown over time, and really to showcase real use cases and applications in the space. And so to that end, by way of introduction, for those who might not know me, I'm Morgan Krupetsky. I lead institutions and capital markets at Avalanche. I'm joined today by Roger Bayston, Executive Vice President and Head of Digital Assets at Franklin Templeton, and Chris Perkins, Managing Partner and President at CoinFund. So I am especially excited for today's session because we get to hear from two different and really pivotal partners of the Avalanche ecosystem. Roger and Franklin Templeton from the application and builder side of things, and then Chris and CoinFund from the actual user side of things. So I feel like between all of us, we kind of complete this user journey, and where we can kind of really delve into, the problem statement, how you guys are going forth to solve it, and how you guys are actually leveraging the technology and why, and what that looks like. So we will definitely get into all of that. I should note a disclaimer to say that nothing contained in this session should be considered financial or investment advice of any kind. Views are representative of individuals, and please remember to do your own research. And before we get into the nitty-gritty, let's start with a quick round of introductions. Roger, why don't you kick it off? Tell us about yourself, your role, how Franklin Templeton kind of fits into the blockchain ecosystem, how you guys are thinking about the technology. I know you guys have been involved in this space for quite some time now, and are definitely considered to be on the more progressive side of the spectrum from an institutional standpoint. Tell us about how you guys are thinking about leveraging the tech as it relates to upgrading legacy infrastructure. I mean, there's so much to unpack, but let's start with you, and then I'll kick it over to Chris to add as well.
How about I just start with the introduction first, and we'll unpack all that as we go through the next, 45 to 60 minutes. Thank you for having us, by the way. I'm Roger Bayston. I head digital assets for Franklin Templeton. Our journey into digital assets really came from how do we use blockchain technology in our core business. And I can dig deeper into that and give you our story as we spend these minutes here together today. But essentially, being a core user unlocked a lot of things for us. We have a lot of record management systems inside of asset management and capital markets. We just were attentive to the idea that there's a new, more efficient way for us to do this record management. Let's just do some pure R&D activity to unlock what that was. And as a result of that, as a result of using these technologies, we came to have a substantial view that as an overall ecosystem, these digital nation states that we call blockchains are super attractive long-term investments into an overall portfolio. And for 76 years, we've been a trusted brand of offering advice about lots of different types of investments. And so the unlock of being a user has also developed into a bunch of, quite frankly, investment services that we provide. But I'll stop there and let Chris introduce himself, and then we can come back to some of those deeper questions that you were asking about, Morgan.
Awesome. Thanks, Roger. I'm Chris Perkins. I'm the president of CoinFund. Prior to that, I was a U.S. Marine for 9 years. I'm an Iraq veteran. Then I did 15 years in traditional finance, largely in the derivative space. Our company, CoinFund, we're actually in our 10th year. Not as long as Franklin Templeton, but that's a lot of years when you're looking at it through a crypto lens. And so we've got over 100 investments in the space. We have 4 core strategies. We have our flagship pre-seed and seed strategy. We have a venture strategy, which looks at Series A and B investments. We have a liquid strategy as well. And then we also pioneered the first interest rate in crypto with an Ethereum benchmark. And we'll be coming to Avalanche soon for something similar. So yeah, we leverage, we like to look at the utility for our investments. I think that's very pertinent to today's discussion. And we're also very very cognizant of the convergence between the traditional and the crypto native. And that's one of the roles that I fill here.
And I know, Chris, you can particularly kind of relate to that convergence coming from the TradFi space. I know at least I kind of experienced firsthand, and Roger, you kind of alluded to this as well in terms of leveraging the tech, but what happens when systems don't talk to each other, when things happen kind of in siloed processes requiring a lot of manual reconciliation. I know that you could kind of appreciate that. And I feel like that's, to your point, a big value add and lens that you add, navigating the space from a coin fund standpoint. So I think you'll bring interesting insights as well.
Yeah, for sure. When we look at various investments or opportunities or use cases, is it an improvement over the way things were done? And I think we continue to uncover that, yes, we can eliminate and mitigate that risk. We can lower counterparty risk. And these are things that are very pertinent based on my traditional experience.
And so given that, maybe Roger, if you want to just delve a little bit more into that journey that you kind of alluded to in the beginning in terms of leveraging the tech, how, I think a lot of people kind of throw around the word efficiencies and cost savings. Would love to understand kind of some of maybe like the aha moments or things that you guys realized internally where this tech could really create those efficiencies and cost savings that everyone talks about. And then we'll obviously specifically go into the BENJI products, but would love to dig a little bit deeper in terms of your guys' experience and what that looked like to really, even just kick off your digital asset journey.
Happy to do that. I made a decision many years ago just to keep hiring people who are much smarter than me to work with myself. And that unlocked my ability to basically pay attention to some big picture things. I've always had this thought process of how do we, when we're talking to clients large and small, we want to improve their solutions. And in my mind, that means basically like increasing the efficient frontier in some way, not just encouraging clients to go out the risk spectrum in order to get better returns, but are there ways that we can actually unlock new and interesting assets? With that background, I was encouraging us to pay attention to the words distributed ledger technology. Those words are important. The ledger component, as I mentioned, the records management inside of the mutual fund business, we're issuing securities. We have transfer agency record keeping responsibilities that come alongside of our issuance of securities. We had an idea many years ago now to apply this blockchain technology on top of a pretty plain vanilla US government money market fund. And the reason we pursued that was because we knew that money funds had more transactional activity related to them. Money funds are classified as, M2. When you think about money supply, they're the second closest thing to fiat that you can get. And quite frankly, for a number of decades now, investors in money funds have been able to have check writing capabilities. I mean, when's the last time you actually wrote a check, by the way? But debit card capabilities on top of them as well. So I just posed that if we could solve this, if we could search out efficiencies in a money fund because they had more transactional volume than a long dated investment, that we could potentially apply these technologies and learnings to our entire suite of 1.6 trillion in products and services. In the transfer agency process, it is really the transaction records that is the massive database. It's the massive record keeping system. So if we think about something like BENJI, FOBXX, which is our, the tokenized version of this money fund, Morgan comes in, she buys, she subscribes, that's one data record. If we reinvest those daily dividends, next day, it's another data record. You can imagine as long as you hold, there's a number of different transaction records, and that database grows, quite large. Who Morgan is, where she lives, those things are pretty static from a record keeping system. So that doesn't change much, but it's this massive transaction data record keeping system that we have functional responsibility for. And those historically have been kept in monolithic centralized database systems. The question is, can we apply this new distributed ledger technology on top of that to improve efficiencies? And this is where our really unlock aha moment came from. My good friend Jenny Johnson, CEO of Franklin Templeton, ran operations for Franklin Templeton for a long period of time. And so, as we were on this journey with her specifically, when we began to uncover, parallel processing between BENJI running on our legacy centralized monolithic database system and the costs there versus the new system, the cost savings was, quite frankly, astronomical for that records management purposes. And, in addition, there's a whole bunch of utilities that would unlock, but just the very first aha moment was records. We have a lot of records management. If we can create more efficiencies of that, drive down costs, then we can lower costs potentially for the shareholders in our products and services. Those shareholders get higher returns as a result of that. That's the first, major unlock. But then it also just had us thinking, in this data information economy that is continues to expand globally. And by the way, we think AI turbocharges that. There's a lot of records management. There's a lot of block space to be sold across planet Earth. Therefore, these ecosystems are going to continue to grow. They're going to continue to be important utility layers for the information data economy going forward. Let's offer advice. And so that's kind of how that is the longer version of that intro story that I gave a few minutes ago.
But that's definitely helpful in terms of how you guys are looking at it, and also why you chose to kind of hone in on the money market fund product to kind of start. I feel like you guys probably pursued the money market fund route first, and now it seems like every asset manager is launching their own, version of BENJI. So kudos to you guys for kind of leading the efforts there. You mentioned the product, you mentioned within BENJI, the specific money market product. Tell us, and for the audience, just to know, this was kind of the announcement that was made a few weeks ago to say BENJI and the money market fund product is now offered and integrated with the Avalanche blockchain. And so we'll get into kind of the app and how that works. But talk to us a little bit, Roger, about the product itself, about what it gives an investor, whether it's a business or an individual, access to. And then we'll talk a little bit about, to your point, the capabilities and the utility. But tell us a little bit about the product itself. I know you mentioned it, especially for those who might not necessarily be as familiar with the money market fund.
Yeah, absolutely. It's nothing more complicated than just a money fund construct. Across planet Earth, there's literally trillions and trillions of dollars in money fund constructs. Institutional individual investors have used money funds as part of their liquidity layer. Money funds have existed side by side with depository institutions, bank accounts for financial managers and individuals to have store of value for those parts of their portfolio they didn't want to keep liquid and not at some sort of market risk. And so that it's pure and simple. That's what it is. Now, how does it look inside of this overall digital asset ecosystem? Again, bank accounts and money funds have sat side by side, in history for a long period of time. We like to think of stable coins as similar to a bank construct. Give a stable coin provider $1 or another piece of fiat. They go and invest it in a portfolio of investments. And then when you ask to get you redeem your dollar, it's available there because they have that collateral. The difference between money funds and bank accounts, though, is that, in this case, in stable coins, is that a money fund by regulatory construct has to pass out all of that investment returns and income specifically to shareholders. And so we think inside of the walled gardens of a securities related business, there's a lot of application inside this digital asset ecosystem for money funds that ride on public blockchain rails. And that has been our pursuit to uncover those opportunities, because once you ride on blockchain rails, the efficiencies, not just to the operator of the money fund, but to the users become quite compelling. We think this is the first time what we have seen the ability for users to be able to take a yield bearing instrument and transfer that to another user literally as fast as we can append a new block on Avalanche, right? Which is pretty darn quick. And so rather than Roger liquidating a money fund, going to fiat, sending that fiat to Chris, because he bought me an adult beverage at a Pearl Jam concert 2 weeks ago, and then Chris taking it and reinvesting it into a money fund, now I can immediately transfer to Chris the BENJI product, the token, and it's yield bearing. You kind of remove that intermediary step, and these are the benefits of being on the blockchain rails, among a bunch of other unlocks. But the idea that you kind of have a stable coin that you actually offer yield, that's a pretty compelling investment construct that we have found over our years of offering yield bearing products and services across the planet.
Yeah, and I think we were mentioning earlier how there's a lot of different asset managers and institutions out there now launching money funds. I think a lot of them, frankly, saw the $170 billion plus market cap in non-yield bearing stable coins on chain. And so to the extent that, any percentage of that could potentially be converted into yield bearing, whether it's a savings account or as a form of peer-to-peer or B2B payment, I think that's what a lot of asset managers, at least in the first instance, are targeting or are looking at. But I'd love, Chris, your perspective, especially, and Roger, you were mentioning this earlier in terms of like how foundational money funds are to, the financial services ecosystem and the economy. And Chris, without naming names, I know you ran a pretty big prime brokerage business. And so you have, I think, a lot of really interesting insight and firsthand experience into kind of how certain foundational markets function. But I'd love to just like get your perspective in terms of how foundational this type of product is. How is it used in TradFi today? Just to give our audience kind of a sense of like the context and what bringing this on chain means, what could it look like, and then we can go from there.
Yeah, I guess I'll start with the global financial crisis. And what happened after that was regulators were really, really nervous because they couldn't see that their derivatives, they had a lot of risk. And so what they did was we said, you know what, we don't have the technology. So we're going to put everything, we're going to jam it together into these things called clearinghouses. We're going to require collateral. We're going to monetize it. So it's this massive centralization. And we're going to force everyone to use intermediaries to trade derivatives. And I haven't even gotten to FX markets yet. What you would think would be that if you're forcing intermediaries into a system, that would be an incredible boom for the intermediary business, and it would just explode in size. I ran the largest in the world, and wouldn't you know it, intermediaries started dying. Why did they start dying? Because there was a lot of costs, fees got compressed, and there was a massive amount of consolidation. That consolidation led to a lot of risk. And why is that? Because when I was running clearing businesses, sometimes I would have billion-dollar margin calls. And if I didn't have access to that liquidity, it would be problematic. And only the biggest in the world could scale and afford that liquidity. And why is that? It's because the settlement processes were so ancient. So essentially, a client would do a trade. The clearinghouse would call me for the risk and the collateral on that trade. And then I would wait and I would wait. Generally, it was after T, the client would pay me back at the end of T+1. If it went into a weekend, then we're talking T+2 or T+3. Throw on some yen settlement currency risk, and it could be days before I got paid back, right? Very inefficient, very dangerous for the system. And so an alternative to the centralized structure is decentralization. At the time, we didn't have the technology. Now we do. The killer use case for this, for high quality liquid assets, is collateral. Collateral is required in the hundreds of billions of dollars every day. I'll talk about stable coins in a second. But if people can take risk and pay for that risk in real time, the world is a better place because you're not moving risk around and other people aren't paying for it. And you're not having these concentrated deficiencies, as I've witnessed. And a lot of it's really because of that lumbering, ancient BACS processing rather than instantaneous settlement that you get through a chain like Avalanche. So massive, massive problem. This is the solution. I'm on a CFTC Global Markets Advisory Committee. One thing that I've been pushing very, very hard is to suggest that forget the wrapper. The wrapper shouldn't matter. What should matter is the underlying asset. So if we're able to tokenize something like BENJI, we're able to tokenize other eligible forms of collateral. Not only should we be able to use it to move those assets to the system faster to reduce risk, it should be actually encouraged. And, also having dialogue with people like the Basel Committee saying, guys, why are you so hard on public blockchains when if we use and we tokenize assets, it's actually going to reduce risk in the system? So massive, massive utility in the form of collateral. It'll make the system a better place. It'll make the world a better place, and it will result in more efficiencies and greater access to markets. When I was talking about those intermediaries dying and consolidating, guess what? It's much more difficult to access certain markets when you have to go through an intermediary and you're a smaller player.
Yeah, I think it's actually an interesting point in terms of the way that you laid it out, because I think historically we saw certain blowups in the space in terms of, what happens when you have really increased counterparty credit risk. And there were certain things that were put in place, whether this example of centralization in intermediaries or things like initial margin, that were kind of put in place because the rails weren't developed enough to be able to address it really any other way. And now between distributed ledger and tokenization and smart contracts, the old constructs or the historic constructs that we use are no longer like the optimal solution, right? Because if you have, to your guys' point, an asset and a form of payment that are both tokenized on the same distributed ledger, well, then that can facilitate, atomic value transfer, whether that's the asset or the payment or whatever it is, and therefore bypass the need for something like initial margin potentially. So I think to your point, Chris, and bless you, you're doing a lot of work in the advocacy space, and I obviously Franklin Templeton is as well in terms of regulatory relationships. But I think there's a lot of education that's just needed in terms of explaining how the tech is really just an enabler to real world, issues.
Yeah, one thing that I didn't mention that you started to bring up there is something called capital efficiency, right? So when a counterparty calls me for collateral as a buy-side member, because of the settlement latency, they may have to collateralize me to 5 or 6 or 10 days, where if you're settling instantaneously, the amount of collateral you have to post is actually much lower. And then when you're looking at the risk that you're able to address through this real-time settlement, I'll draw your attention to 1974 in Cologne, Germany. There was a bank called Herstatt. It literally went bankrupt because of settlement latency. And we've been trying to solve it through a centralized means in TradFi via something called CLS, but it's not comprehensive. It's expensive and exclusionary. So I do think that, you're able to address some really fundamental risks and make the system a better place.
And especially with equities moving to T+1 settlement, I mean, all that FX in the background, has to figure out a faster way to settle.
The next major financial crisis in my mind is going to be the basis between traditional markets and crypto markets. You're right. If equities moves to T+1, FX is still settling T+2. Crypto stablecoins is settling in minutes. That basis is really dangerous. And the solution is not to slow down crypto. It's to fix the rest of the system.
Yeah. And Roger, I saw you go off mute. I don't know if there's anything you wanted to add there.
Well, I just wanted to add that you're talking about the regulatory conversations. These are just so paramount to the kind of work we've done. Our journey on BENJI has been years in the making, and part of that is because it's this idea that that in the U.S. regulatory environment, getting over the hurdle that BENJI was not some decentralized issuance. We're actually a centralized issuer of a security, and we're just using these records management systems, this distributed ledger, this block space, to improve the process for the stakeholders. It improves the process clearly for the helping us to reduce costs, as I spoke to. But from the regulators' perspective, the idea that they can put eyeballs on these transactional activities through the through the explorers is a key beneficiary, that increased transparency from their perspective, rather than having to the legacy system was, let's go get a subpoena and crack open somebody's transfer agency system to uncover the information. In this case, they now, as a stakeholder, they can observe and watch in a more real-time way. So it's this idea that it's just another new tool inside of the transfer agency process that represent good control environments on as core infrastructure for the securities business has been a really significant and expensive lift for Franklin, not just in the U.S. but also globally, as these constructs we're bringing as a global manager to other places. We think that's well worth the investment in time and effort. And we are seeing a lot of other type of money fund constructs come up. We are the only one that we know of that is a public security 144A money fund construct that has the blessing, the permissions from the SEC to operate these records on public blockchains. I mean, that's a big unlock that allows us to do things like instant transferability, because we're not using a shadow record keeping system in some way, shape, or form. We are operating, on great blockchains. And it's our conversation, quite frankly, with them about the standards that allow us to be able to bring, BENJI, into the Avalanche environment, because it meets the very high bar of security and resiliency, and that we're talking to the SEC. It's a safe construct for savers to be inside of, and that's what we're super happy, because it's been several months that we've been in this conversation specifically with Avalanche about this journey, and to be here right now is a kind of high five moment for all of us.
Pre-virtual high five.
High five.
You brought up two really good points that I just want to emphasize and maybe press on one of them. First, you mentioned, and I know Franklin Templeton for a while has been a big proponent of building on public permissionless chains, which is, in contrast to historically, a lot of institutions have favored what we call like enterprise chains, which are effectively kind of islands or databases like living out with no interoperability, no native integrations and liquidity. And so I think kudos to you guys for kind of realizing that early on. But you did mention also, especially in the context of tokenization, where a lot of these assets that are being tokenized are considered securities. Like, I don't think most people are not kind of, debating that. And so just because you're deploying on public permissionless infrastructure doesn't mean the assets that you're issuing are fully permissionless, right? And so there's ways that the tech has evolved such that you can compliantly issue and facilitate peer-to-peer transfers of, in this case, the BENJI token, in a way that is still abiding by laws, rules, and regulations in full compliance and approval, explicit approval from the SEC. But to your point, leveraging permissionless DLT infrastructure. So you are, I think, showing kind of firsthand how those concepts are not, at odds or not mutually exclusive.
No, I would absolutely affirm that. In fact, I think it's an improvement of what currently exists for a number of different reasons. And I think, these are the things that will have wide scale institutional adoption. I know Chris said that he had some comments to make about stablecoins in general, and as a new form of money that is a super dynamic and interesting construct. But once a stablecoin leaves the primary issuer, how it percolates out into the ecosystem by being traded off a number of different exchanges and then comes back, everything that Franklin Templeton's engaged in is in KYC, AML processes. And so, but we think institutional adopters of this new ecosystem is where the unlock is going to be. And Chris has pointed out specifically as it relates to collateral management inside of constructs, just the idea that you don't have to hold money in your bank account and lower interest bearing, but you can actually earn some fully collateralized yield. I mean, what did we learn, by the way, in the SVB First Republic weekend of disaster? Was like, people didn't really even understand what money funds were inside of the digital asset ecosystem. We've had so much maturation of financial management. I remember us going to talk to people like, well, you had your money in the bank and it's only subject to $100,000 deposit insurance. I mean, you had billions of dollars there. Well, money funds are fully collateralized. They're 100% collateralized. They've been through the test of time, including credit cycles. And it's really interesting to hear Chris's prospect about this, where the future challenges might happen within all of this construct. I would add on top of that, this digital asset ecosystem has only grown up in what has been a pretty benign credit environment by and large, right? I mean, we haven't had a full-blown credit cycle kind of pass through the entire digital asset ecosystem, since it's been permeated. I think that's going to be another interesting unlock about where credit risk might actually overall exist in the system, and where it gets highlighted. I think that's going to be another phase that we're going to need to process through before we see massive adoption of these type of utility tools.
Yeah, Roger makes a good point. And, putting our fiduciary hat on as investors, we have to be really mindful of the counterparty risk that we're taking. We're super sensitive to it, particularly in crypto. But to his point around the issue around SVB, the risk wasn't in crypto. The risk was in the fiat banking system failing again. And thankfully, regulators came in and made calm things down, and kind of ignored I think it was $250,000, Roger. I think you're thinking of the old days, the guarantee that you have. But
Either way, it's not billions.
yeah, but that's the point, is that, as a fiduciary, we need to be very mindful of our counterparty risk. And that's why, we choose to be mindful of the risk we're taking to banks, and to use products like BENJI and other tokenized money market funds out there, just because it's the thing to do as a fiduciary. You have to do the right thing and eliminate your risks.
And Chris, isn't that, I'm sorry, now I'm going to ask a question, Morgan, if that's okay with you. But isn't that also the unlocked potential here, the increased transparency that exists between counterparties that exist here? I think another, it's just a dynamic that these ecosystems have grown up inside of a bunch of private companies. And I'm not saying that public companies have better disclosure, but for sure, the idea that the transparency aspects of all this that should help reduce counterparty risk, that you can see what a balance sheet looks like in more real-time basis in order to make informed decisions, is right in front of us. And yet the ecosystem is not. I think the ecosystem could be far more transparent than it actually exists. The promise of the blockchain has all this transparency, but we still have a lot of private actors that don't have the same high level of transparency that I think we're going to need to have in order for it to be even more adoption. I don't know. Do you have something? Am I off base that, Chris, or
no? Like from a counterparty risk perspective, you're spot on. Transparency is everything. And if somebody pushes back against transparency through that lens, I mean, it's different if you're a manager and you need to keep your alpha secret. But I'll go back to a lesson that I learned in traditional finance, and that was with Peregrine Financial, right? You can have the best rules in the world, and if a bad actor decides to engage in fraud or deceit, like these guys literally faked bank accounts, and they went on for a pretty long time, made off the same. But if you have that verifiable, transparent record, it's really, really hard to be fraudulent. And so transparency is the enemy of fraud. And the more that we get, the better. And that's something that we look through as a fiduciary when we're looking to safeguard our assets ahead of kind of any kind of venture investment or otherwise.
And Chris, you mentioned leveraging BENJI and money market funds writ large from a coin fund standpoint. Would love to understand how you guys are leveraging it. We talked a little bit about kind of the why and the value that it brings, but I think as we share with our audience and delve a little bit deeper with our audience around the utility of some of these tokenized assets, would love to understand kind of how you guys came about to considering leveraging BENJI, what that looks like, how does it fit into your kind of operational processes, and then we can go from there.
Yeah, so across our strategies, there are times when we, call capital, and I think probably the most important thing when you call capital ahead of a potential venture investment is to ensure that you have very robust capital preservation, right? We're not looking to, take massive risk on capital when it's designed and designated by our LPs to invest in a certain asset class. And so there's times when there's some latency, you call capital, and you want to make sure that capital preservation is really front and center. And of course, you want to enhance that capital preservation with yield. And so like anything that we do is through the lens of a fiduciary. What are the fees? What's the yield? What is the operational risk? What is the counterparty risk? And so as we look through our approach and we seek to diversify our treasury holdings, money market funds make a ton of sense. If we can tokenize them and mobilize them faster, well, that's awesome too. And these are all factors that we put in to that fiduciary calculus that we're bound to as a registered investment advisor.
And so to that end, and Roger, correct me if I'm wrong, at this point, the investment minimums for BENJI are pretty low. And I think part of that is, again, the fact that you went the route of a public fund and got explicit SEC approval. And so because of that, it affords you guys the ability to potentially, facilitate even lower investment minimums than maybe some of the other money market funds out there. And I know more recently you enabled the ability to facilitate peer-to-peer transfers, which obviously is like one huge utility that it sounds like the CoinFund team is potentially even leveraging themselves. So talk to us a little bit about kind of the key USPs and differentiators of BENJI as it relates to kind of the offering today, and maybe some of the things that you guys are looking to without giving away any secret sauce, but some of the things that you guys are thinking to going forward in terms of the capabilities going forward.
Yeah, I think you've highlighted those. Thanks, Morgan. But this idea that we can make investments more accessible, and the fact that using these great utility pipes like Avalanche to do that, to lower account minimums for investors to use this is just huge. And go back to my first introduction. I this idea that we could apply this to a money fund, but that it would also begin to apply to a whole series of securities related activities where the minimums have quite frankly been quite high. We see those possibilities, right? The private vehicles. There's more things to do than just say here, you can ride on new record keeping rails and lower the fees there. But the possibilities are all within our reach from doing this. But the instant transferability is just so key. This idea that as fast as I can find a new block on Avalanche that I can transfer with both people's permission, by the way. I mean, this is the other, Morgan, you have to agree that I'm going to transfer you BENJI, and then you have to accept it. But that's not a real challenge for institutions who are engaged in moving millions, tens of millions, hundreds of millions, billions of dollars across the planet. So that's a real key. Now, the other thing, by being on the public blockchain rails as the source of truth, a source of record, is the composability. We see and are developing and hope to be able to deliver to customers in short order that, as if Roger transfers to Morgan at 9 a.m. in the morning, BENJI, that beginning at 9 a.m. in the morning, Morgan can begin to accrue the proportional day's interest that previously had been rolled up on a 24-hour clock. I mean, again, maybe not so interesting when when you bought my, I guess, venti decaf oat milk mocha at Starbucks, that proportional interest. But when we are talking about moving large amounts of things like collateral across the planet, and the timing on that and being able to earn more interest over a 24-hour period, those are real possibilities that exist because you're on the public blockchain rails. So the increased, composability of these type of things. I mean, it really has taken a very, very boring, plain vanilla U.S. government securities fund, and it unlocked a massive amount of new utility. And today we're talking about money funds and BENJI, and thank you, CoinFund, for being an investor in BENJI, by the way. But this idea that these are the same feature sets that unlock a whole bunch of other things, assets across the planet, is really, again, what gives us huge excitement about, organizing, advice around that future state as it currently exists, and future state as well. These are all super important things to help us move toward the Web3 economy. And
thank you for that. And Chris, would love to also hear your take as you consider kind of the tokenization space for at large, and the additional kind of capabilities and utilities that you could see developing. Would be really curious to hear your take on what those capabilities and utilities could look like as contrasted with traditional rails. And, maybe, a lot of the times that I think about kind of this space is the combination of this technology, whether it's blockchain tokenization, smart contracts, can make things that were historically economically infeasible or prohibitive, not just possible, but eventually I think will become a strategic imperative. So I'd just be curious, given your experience in being able to kind of compare and contrast those things, what are some of the utilities and capabilities that you feel like you're excited for, you feel like the space could really benefit from?
Yeah, we're super excited about more tokenized products coming on board. Even starting with money market funds, it's a very competitive landscape, and it gives us the opportunity to look at each of the products and ensure that we optimize for safety, security, yield, and a number of other different factors, diversification. And so the more products that come onto the market, it'll give us more choice and diversification going forward. Look, I think we talked about where this is going. This is going to a place where collateral is unlocked, collateral in support of derivatives activity is unlocked, being able to move peer to peer in a very, very timeless manner, being able to move away from required intermediaries and getting back to a more accessible financial system where there's less toll taking, where we can avoid toll taking as fiduciaries of our LPs. One of the challenges that we're facing is that banks are not allowed really to participate in public blockchains today. The reason for that are the Basel rules. The Basel rules make it prohibitively expensive. I don't think that's a good thing. I think in time you're going to see that door start be opened. But in the interim, I do think that there's going to be a lot more opportunity for more direct peer-to-peer access, collateralization, exchange of value, optimizations, and things like that. And it really just comes down to the utility of settlement instantly, transparency on chain. Very, very important.
I'd add on top of that, I mean, what are we seeing happening? The AI revolution that's kind of sitting in front of us, that there's always going to need to be the place for humans to be able to say, send the money, send the collateral. But all of these transparencies are going to be increasingly, viewed through software, looking at software opportunities. We call it, quite frankly, trustware. We're in the business of creating trustware. We are in the business of trust. You trust us to hold your assets, to invest your assets, to be fiduciary for that. So all of these ecosystems, we like to use the word trustware, but increasingly trustware is going to be integrated with a number, other type of technologies that are going to look through. And so the massive efficiency gains are really kind of laying in front of us. This is a better ecosystem for capital markets and for financial transactions. Therefore, we see the adoption coming forward. Therefore, we see, these, ecosystems like Avalanche continuing to grow and find use cases. I mean, we love your story about the California DMV, by the way, being a Californian myself. The idea that you're helping unlock massive efficiencies for users of the Department of Motor Vehicle Records is very exciting, and it shows the use case, real records management use cases that they are going to come to impact people's lives in a positive way. So again, let's do another virtual high five to the Avalanche team for that. These are all unlocks that are unfolding right in front of us that we're super excited about being engaged in that future.
If I could add another thing I think is going to be a very important unlock going forward, and that's privacy. We talk about transparency, but there's also privacy, and the two aren't necessarily mutually exclusive. I know that doesn't make sense. However, we have technologies coming online like zero knowledge proofs. We have a company called Sindri, for example, that's offering tooling on that. I think one of the next unlocks going forward is to be able to prove that you have a certain amount of assets or credit worthiness without having to reveal the underlying assets yourself. That's going to unlock things like collateralization, like credit. Like credit's been very hard to deliver in the crypto native space. I think there's these things like zero knowledge proofs will unlock that. They'll unlock a lot of KYC and AML. This is going to be an area to focus on because transparency is awesome, but at the same time, they're going to be, a lot of finance is predicated on privacy, and I think that is something that's going to be. There's thoughtful ways to unlock that privacy in a compliant way that really facilitates next generation activity.
I'm going to add right on top of that because that is core to our business. Franklin Templeton, I mean, the investors who own BENJI, you do not know who these are. I mean, we are not putting any personal identifiable information anywhere in any public blockchain. I mean, so the construct that we've had to create is having that alongside integrating into this, public blockchain records management system. So I just want to echo, Chris's comments about that, because that's another feature set that's super important as people are building new things in this space and trying to look at the total addressable markets, which is the securities businesses by and large, which is there's going to be massive applications for these technologies in those.
Totally. I mean, I couldn't agree more with you guys as it relates to privacy. I've always thought that we're not going to be able to achieve kind of institutional levels of participation and capital in a sustained way unless you have certain components of transaction privacy, whether that's balance privacy or transaction privacy in terms of, if you have a group of banks and asset managers transacting the same chain, ensuring that, only those institutions who need to know about the transaction, right? There's a lot of privacy that exists as it relates to TradFi. And if you can't kind of guarantee similar types of privacy considerations, and I think one of you guys mentioned like to preserve kind of alpha of an asset manager or hedge fund, those things are going to have to be, and I know Chris, you mentioned, and we're partnering with a variety of different kind of infrastructure partners today to develop various components of that privacy. So fully agree with you. I think last year the big consideration was interoperability. This year, a lot of it is around privacy and digital identity and KYC and what does that look like. So I think all of these things kind of in the coming years will coalesce to really kind of drive things forward as it relates to not just the tokenization space, but the digital asset space writ large. I would be remiss if I didn't ask, maybe directed to you at first, Roger, kind of why Avalanche? Why did you guys, I know you mentioned, obviously you and I have been talking for a while about bringing BENJI to Avalanche, but would love to kind of hear your perspective on the decision process there and what that looked like. And Chris, I know, CoinFund has been a kind of key partner to the Avalanche ecosystem overall. I know you guys have been kind of following along, but let me open that up to you guys, and then we can go from there.
Look, I think there's very high bars and standards for public blockchains that meet regulatory kind of adoption, so to speak, and those are resiliency is one key factor. It needs to be cost effective so that the shareholders who are using these ecosystems for holding their digital wallet assets, assets are it's cost effective. There's security. There's a whole range of things that very high quality bars that need to be met. And we've wanted to be on Avalanche for a period of time. It's really a question of like walking all of those key things through our regulatory friends, partners to get to that place. And we're super pleased that we've gotten there, because we've had we've understood the Avalanche ecosystem itself and its design patterns and what it offers to serve again as a good control environment for the safeguarding of these consumer assets. If we didn't think that was the case, we wouldn't be so hard at this and spend so much time and effort in working through the regulators' kind of permissions as a case to be able to do that. So we were just super excited to be able to get to that place together, and what might unlock and unfold going forward, whether it's on specifically BENJI and a tokenized money fund, or it's any other type of the products and services that we offer inside this $1.6 trillion asset manager that become capabilities and possibilities. So yeah, I think that summary. There's standards. Our good friend, you guys are friends with too, Sandy Call, talks about this movement from a potential platform economy to a protocol economy. We see these standards, and I mean that's the business that you guys are in. These protocols that we are doing our part in partnering with the global regulators to allow these ecosystems to be these ecosystems of trust for our customers and clients. So thank you, Avalanche, for being such a great partner in that.
I guess well, we have always believed in a multi-chain world. I think chains will continue to compete on a number of different factors. One is TPS, transactions per second. Security is another. Cost is another. I think community factors very powerfully as well. And then the ability perhaps to toggle between a self like an app chain, for example, and then the ability to toggle between something that's private and permissioned into something that's public and maybe non-permissioned. I think Avalanche factors very well into that calculus, and I'm not surprised by the institutional momentum that you continue to have success in gaining, Morgan.
Not just, it's not me, we have a whole team. But thank you both. As we wrap up, would love to hear, Roger, from you in terms of call to action. If an individual or a business, an institution wants to learn more about BENJI, tell us, where do they go? How do they access the platform? Who is it open to? Yeah, I think you know, our audience, and as we post this session on replay, I think you know, our audience, both domestically and globally, would love to kind of learn more.
Yeah, you can go to BENJI Invest at in any of the app stores and download you know, BENJI and begin to, you know, play around with yourself on an institutional basis. We also have a web-based interface for institutional users because of we have another standard when we're moving money in institutions that isn't just, you know, similar to a kind of a Zeller Venmo, and so there's, you know, maker checker instructions, but you can find us there as well. And you know, I would encourage, you know, coming into the experience and playing with it, quite frankly, and figuring out how it might help provide more utility to your liquidity management, quite frankly. That's kind of our call to action, is the more users that we bring into the BENJI experience, the more, you know, kind of network effects and people and or institution individuals can use it. So, you know, come join the fun.
Thank you. And Chris, any parting words from you, whether about BENJI, the Franklin Templeton team, the tokenization space at large? I'll hand it over to you.
No, I think we covered it. Thanks for having me. We're always keen to bring more institutional participation into the space. That's going to be the next big thing. I think we all agree on that. And just thank you to the fellow panelists, Roger and Morgan, for building out that infrastructure and applications that's going to make that possible. So thanks for having me.
Thank you, Chris. Thank you, Roger, for joining us. Thank you to the audience for joining us as well for this latest installation of Powering Business with Blockchain. The replay will be posted in the next few days. And thank you again.